is excellent question. It clears your each and every concept of capital budgeting. It tests your real knowledge of capital budgeting rather than just the formula. Try to concentrate. Given below are the data of capital project M. Annual cost saving is 60,000. Useful life is 4 years. Internal rate of return is 15%. So you save annually 60,000 rupees for 4 years. This is your cash inflow. Internal rate of return profitability index is PI is given 1.064. Salvage value is 0. You are required to find out cost of project, payback period, cost of capital and net present value. Cost of capital is nothing but your required rate of return. Cost of capital is nothing but required rate of return, which you need to find it out. Now, every year at the end of 1 to 4 years, there are cash flows of 60,000 every year. This is what is given. What is the cost of the project? We need to find it out. Correct. What is given? Useful life 4 years that we have considered. Internal rate of return is 15%. What does this mean? This project is earning 15% rate of return, or at 15% rate of return, NPV will be 0. So I am finding out present value at the rate of 15%. Find out present value of cash inflow at the rate of 15% of the 60,000. So it is 1 divided by 1.15 is equal to M plus 2, 3, 4. MRC multiplied by 60,000. 171,299. 171,299 is nothing but present value of cash inflow. Present value of cash inflow at the rate of 15%. And what we have decided, at the rate of 15%, my NPV will be 0. So how to find out NPV? Present value of cash inflow minus present value of cash outflow is NPV. At 15%, my NPV will be 0. So what will be my present value of cash outflow? 171,299. And 171,299 or 1,71,300 approximately is present value of cash outflow. Present value of cash outflow is nothing but cost, which is 171,299 rupees. See, a weird way, they are not telling you the cost of project. They have given you cash flow. They have given you IRR. And they are telling you to find out cost of the project. Cost of the project is 171,299. In fourth question, they are telling me to find out NPV. They are telling me to find out NPV. What is NPV? NPV is 0. We have found out NPV is 0. Yes or no? No. All right, you are correct. The answer is no, because NPV is 0 at IRR. at 15% NPV is 0. Whenever we want to find out NPV, NPV is always at required rate of return, which is not given. Required rate of return is given or not given? Not given. You need to find out cost of capital. So required rate of return is not given. Cash flow is given. Present value of cash outflow also I have found out. But how you will find out present value of cash inflow if the rate is not given? Then here is the point. PI is given. What is PI? PI is nothing but present value of cash inflow divided by present value of cash outflow. What is PI given? 1.064. What is present value of cash inflow? 171299. 171299. No. 171299 is present value of cash inflow at 15%. 15% is not my required rate of return. NPV and PI are found out at required rate of return and not at IRR. Both NPV and PI. So this is not my present value of cash inflow. This is present value of cash inflow at 15%. What I want? Present value of cash inflow at required rate of return. Sir, what is required rate of return? We don't know. So present value, what is happening? It is present value of cash inflow divided by present value of cash. Present value of cash outflow is 171,299. At 15%, at 12%, at 10%, present value of cash outflow is always a present value. So it is 171,299. 171,299. So I will be getting answer of present value of cash inflow at required rate of return. Is 1.064 into 171,299. One 171,299 multiplied by 1.06, 182,262. It is present value of cash inflow at required rate of return, 182,262. Now what is required rate of return? What is your cash inflow? From 1 to 4 years, it is 60,000, right? And we also know present value at the rate of required rate of return, present value of cash inflow at the rate of required rate of return is 182,262. Now I will be using trial and error method to find out what is my required rate of return. So discount this 60,000 by 15%. We have already discounted. It is 171,299. Discount it by 14%. Now I want to reduce that amount. So discount it by 14%. 60,000 at the rate of 14%. I am doing trial and error. 1 divided by 1.14 is equal to m plus 3, 4 MRC multiplied by 60,000. It is 174,822. So 14% is not a correct answer. Try out with 13%. And then try out with 12%. At 12%, your present value of cash inflow will be 182262 approximately. So 12% is nothing but a required rate of return. See, this question will take somewhat a time to understand. You can repeatedly see this question and try to understand. It is conceptually very good question to revise because it gives you an idea that NPV and PI are at required rate of return. You find out some NPVs at IRR also. At IRR, NPV will always be zero. What was given in the question? Cash flow and IRR is given. You can find out present value of cash outflow means cost of project. Then PI is given. You can find out present value of cash inflow at required rate of return. And from present value of cash inflow at the rate of required rate of return, you can just do trial and error and find out what is your required rate of return, which will be 12%. So it is a reverse question. All the answers are becoming question and questions are becoming answers. Also, in this question, you need to find out payback period. Thus, I am keeping it upon you. All right. You need to draw 1, 2, 3, 4. Your cash flows are 60,000, 60,000, 60,000, 60,000. All right. I will have to find out present value at the rate of what? I want to find out payback period. 15% or 12%? 12%. 15% is IRR, not important. IRR is important just as an answer. The project is earning 15%. NPV and PI are calculated at discount rate at required rate of return, which is 12%. So find out cash flows. Let me do it. 60,000 divided by 1.12. I think my eraser is gone. 60,000 divided by 1.12. 53,571. 53,571. 53,571 divided by 1.12. 47831. I need to recover how much? 171,299. Okay. It is 47831 divided by 1.12. 42706. Divided by 1.12. 38130. 38130. I want to find out cumulative cash flows. Five three 571 plus 47831. 1,01,402. Plus 42706. 1,01,402 plus 42706. 1,44,108. 144,108 plus 38,130, 182,238. I want to recover how much? Initial investment 171,299. 171,299 is my initial investment. It will be after 3 years, it will be recovered. So base year will be 3 years. Payback period will be base year plus 171,299 minus 144,108 divided by 38,130. Base year is 3 plus this. It is 171,299 minus 144,108 divided by 38,130. 38,130 plus 3.7 will be payback period. So I think this is one of the most important question as far as this type of questions are concerned, or understanding of payback period, present and NPV, IRR, profitability index is concerned.